Hello Accounting 101 students. In this video, we are going to go over the end of chapter 7, practice question number 6. And in this problem, we're going to be preparing a bank reconciliation along with the adjusting entries for that bank reconciliation. So in this problem, we're given the balance from the general ledger. We're given a portion of the bank statement and some of the details from the bank statement and details of what the company recorded in order to prepare this bank reconciliation. And for our bank reconciliation, this is prepared at a specific date in time. So all of the transactions should be reflected in the balance as of the end of the day at May 31st, 2017. We always start off with our part 1 of our reconciliation with the cash balance per bank statement. Then we're going to add and subtract our reconciling items in order to get to our adjusted cash balance per bank. Part 2 of our reconciliation starts off with our cash balance per books. And we're going to add and subtract reconciling items in order to get to our adjusted cash balance per books. And at the end of the reconciliation, you have to make sure that our adjusted cash balance per bank equals the adjusted cash balance per books. So you have to continue with this bank reconciliation until these two numbers are equal to each other, and that would reflect the correct cash balance that needs to be on the balance sheet. With part 2 of our reconciliation, anything that affects the cash balance per books needs to have an adjusting journal entry. So as we go through this, you want to keep in mind that we need to be recording some adjusting journal entries for Cullenber Company. So we're going to go ahead and start with our information in our problem. So we have Cullenber Company, and we are given the cash account balance from the general ledger, and that dollar amount is $6,908.90. So I put that as a side note so that way when I scroll down, we're able to recall what this balance is. Then we have our balance per bank statement. So this balance per bank statement is prepared from the bank's perspective. So typically the bank statement will have the beginning balances. It'll have all of the money that is deposited into the bank, and then it's going to subtract out the money that is taken out of the bank, and it'll end up with the ending balance as of the last day of the month. So the balance per the bank statement on May 31st is going to be $7,138. And you can see that there's a difference between these two records, and that's why we need to do this bank reconciliation to identify the reconciling items to arrive at the correct cash balance. So our first example right here, the statement included a debit memo of $58 for the printing of additional company checks. So this is going to be referred to as a bank charge expense. So the bank is charging us, Cullenber Company, $58 for printing the checks. And that's going to be $58. And sometimes students get a little bit confused because you see the word debit memo. Basically, one thing that you want to realize is that this bank statement is prepared from the bank's perspective. So from the bank's perspective, anytime they're holding someone's money, that means that they owe that money back to the client. Okay, so the amount that they owe to the client is essentially their credits. Okay, and then when someone cashes a check, then it would be a debit. Or anytime money is withdrawn from the account, such as discharge, it would be a debit. Next, we have cash sales of $901 that were deposited into the bank. The cash receipts journal entry and the deposit slip were incorrectly made. So basically, this affects the company's records because we're recording the journal entry incorrectly. But the bank credited Cullenberg Company for the correct amount. So basically what this means is that someone went to the ATM and they deposited in $901. So that $901 get deposited. So in the company's balance, that $7,138, this reflects the correct balance of $901. But what happens is that the journal entry was incorrectly recorded. When somebody wrote the journal entry, instead of including the $901 for that cash sale, they debited cash for $951.15, and they credited sales revenue for $951.15. But you can see that this is the incorrect amount by $50. So in order to correct this, we need to arrive at the correct cash balance. So that means we need to record an adjusting journal entry in order to reduce our cash by $50. So when we look at our T accounts and we have a debit of $951.15 corresponding with a credit of $50, that's going to balance out to $901.15. So that will be the correct amount. And also, we didn't generate as much sales revenue. Our sales revenue that we generated was actually $50 less. So now we need to reduce that amount by $50. So you can see that we're going to need to record an adjusting journal entry, and this will be for part 2 of our reconciliation. So I'm just going to be making a couple of notes here just so we can keep track. So number 1 was the bank service charge expense. We need to record that journal entry. For number 2, this was for the deposit. So we need to record an adjusting journal entry. This also affects part 2 of the reconciliation. So number 3, we have outstanding checks at May 31st that totaled $267.25 and deposits in transit of $1,898. So both of these items, the deposits in transit and the outstanding checks, they affect part 1 of our reconciliation. So in part 1 of our reconciliation, we need to make sure that we add our deposits in transit, and you'll include the dollar amount, and you're going to subtract the outstanding checks, and that's going to be $267. All right. Then we get to number 4. So number 4, the company issued a check for $686 to H. Moses on account. So the company wrote a check, and the check cleared the bank for the amount that the check was written for. But what happened was that it was incorrectly journalized, and posted by Cullenberg Company. So this is also going to be a company error. And what we need to do is we need to correct that error. Okay. So the check was correctly written for $686. So this amount was correctly deducted to arrive at this daily balance. But what happens is that the journal entry was incorrectly written. When somebody wrote the journal entry, they reduced accounts payable by $668, and they reduced cash by $668. But what happens is that we actually reduced our cash by $686. So we need to reduce our accounts payable by an additional, and this is where you need to take the dollar difference. Okay, so 686 minus 668, and you can see this was a transposition error, was a $18 difference. So we're going to have an adjusting journal entry to record the correct amount that was being deducted. Then in number 5, we have a notes receivable collected by the bank. So we need to go ahead and record our electronic funds transfer received. So that will be an increase to cash, and we're going to decrease our accounts receivable. And then for number 6, this is included in the canceled checks, was a check issued by Thomas Company to C. Pernod for $342 that was incorrectly charged to Cullenberg Company. So this one is actually going to be a bank error because it went into the wrong account. So number 6 is a bank error of $342. And then the last one, we have a bank statement that showed an NSF check of $550. And this NSF check is going to affect part 2 of our reconciliation. So we want to go ahead and include our accounts receivable back into our accounting records and also reduce our cash. So we need to subtract out that NSF check. So as we go through our reconciliation, now that you know what the adjusting entries are and what the adjustments are, you can see that we're going to add our deposits in transit, subtract out the bank error. Add in the bank error, sorry. We're going to subtract out that outstanding checks to get to our adjusted cash balance per bank of $9,110.90. On our cash balance per books, we're going to go ahead and add the EFT received, and we're going to subtract out our NSF check, the error in deposit, error in recording check, and the check printing charge. And you can pause the video to see all these amounts. And the last part is our adjusting journal entries. So the first adjusting journal entry is to collect the notes receivable by the bank. So that's the electronic funds received. And then we have our NSF check. We're going to be recording our adjusting journal entry for the sales revenue and the cash. We need to record the additional accounts payable and the bank charges expense. Okay, so take your time to pause this video as needed to see the adjusting journal entries and also to see the bank reconciliation. All right, thank you for taking the time to watch this video.